and gentlemen, welcome back to episode 17 of the Forecast Edges midday broadcast. Matthew here. Again, this is going to be for the Forecast Edge YouTube channel midday broadcast, and we are going to cover some very exciting stuff. We have a brand new Edge Alert on ticker CCL. We'll get into that in a moment. We also did our free egg play. So we posted yesterday in a video of an actual Edge Alert and showing you step by step how to execute these Edge Alerts when you are receiving them, okay? So with that being said, we are going to jump into our favorite trading community, the Forecast Edge, right here. This is our Substack. So if you are interested in being a part of our trading community, go to our website, theforecastedge.com. Okay, that again is theforecastedge.com. On the right-hand side here, you're going to join the war room, select which plan's right for you, and then you will be granted access to our trading community, which we have over 130 individuals in our room now. And this Edge Alert is less than 24 hours old that we're going to be going over right now. This is free value, free intel on the exact trades that we take in our trading community here at the Forecast Edge. So let's jump in, right? This is going to be the Carnival energy consumer squeeze. Okay, my friends. Here is our thesis on today's Edge Alert. The consumer energy squeeze. We are tracking a massive vulnerable we are tracking a massive vulnerability in Carnival Corp, right? CCL, triggering by the macro rotation into the semi-permanent war economy that we're heading into, right? With what happened with the bombing in Iran, okay? So this is going to be a semi-permanent war economy that we're going into. CCL is being structurally crushed by a dual threat macroeconomic environment, and here it is. The energy tax, okay? This is the first one. Spiking crude oil prices from geopolitical escalations are destroying their forward fuel margins, okay? And even right here, you can see that the futures contract for crude oil in the last days almost up 8%, and even today reached a high of 77 cents and 98 cents. And we're in on this play here, and this was also a prior Edge Alert with these BNO and XLE, which some people made good returns on this one if they are managing these positions, which is why we're here today. This is what we do every day live on our YouTube channel. We manage the positions that we take here as our individual traders at the Forecast Edge, okay? Again, with that being said, this isn't financial advice. We are not CTAs or CPOs. All we are doing is sharing our trade ideas with our one community and friends on YouTube. We are giving the trade ideas and showing you our reasoning, showing you the contracts we're taking, and exact risk management. That is the most important piece. We show you the exact risk management that we take when taking and executing these positions. Now, back to business. The first one, like we said, is the energy tax. Spiking crude oil prices from geopolitical escalations are destroying their forward fuel margins. Okay, this is for CCL, ticker CCL. The directional drain is the second macro economic event. Ready? The institutional liquidity vacuum is violently sucking capital out of consumer assets, leaving luxury travel without a retail bid. Okay, now the stock took a brutal 7.5% hit yesterday, or hit. This is when we put this out. So yesterday. However, we have combed the tape and identified a massive 21,000 open interest positioning at the $24 strike. This massive institutional floor will act as a volatility magnet, okay, to capture the descent to this target while strictly adhering the level 1 option mechanics, right? We are developing a highly optimized capital efficient downside stack. Now, let's put this in real quick. Let's go to our share or our CCL chart. And the first thing we're going to put on this chart is this line here, okay, at $24. This is the magnet we're talking about, and we've had a very healthy downtrend so far, especially with the massive move that we saw yesterday. So here we go. We're going to make this. I like to make them gold, all right? That's where we're heading. This is what we want. Or even for today's lesson, we will make it silver because it's acting as the liquidity magnet. Okay. Now, here we go. We are going to be doing the 60-40 capital efficiency split. This is where and how we are going to be executing this position to mathematically optimize our convexity to theta. Okay, we are convexity to theta ratio. We are shifting away from a traditional 50-50 model, and we are allocating 60% of the capital to the convexity kicker and 40% of the capital to the probability anchor. Okay, why this structure is superior. Here are all the beneficial um, reasons for taking this stack and taking this structure of 60-40, not 50-50. Okay, less capital in peak IV at the money, right? You reduce your upfront cost basis on the most expensive contract on the board. Okay, number two being more convexity per dollar. By overweighting the $27 strike, you buy a cheaper engine that yields a significantly higher percentage return on investment if the $24 volatility magnet pulls the price down, which it seems like it's still working in our favor in that sense. Now, the IV compression defense, you are mathematically less exposed to the immediate initial volatility crush, right? And if the stock chops sideways for a day, it takes us we're not as exposed to that, okay? Now, here is execution matrix. This is what our bread and butter is here at the Forecast Edge, the exact contract. Okay, here is the execution matrix. We're buying into strength. Critical tactic, buy into strength on a moderate bounce. Do not short the whole. Okay, CCL just dropped almost 8% in a single trading session, and that was yesterday. 3/2/2026, today being the 3rd of March 2026. Okay, 8% in a day. Now, if you buy exactly at the open, which we did this morning, we'll show you our contracts, you are paying maximum panic premium. Expect a 2 to 3% reflex bounce in the underlying stock, targeting $29.75 to $30 range. Let the algorithmic dip buyers step in and compress the IV slightly before you execute your fills, which is saying now is the time for our Substack and our community members is an open opportunity to get into these positions without taking this morning's volatility. Okay, now the first leg is where we're putting 60%. This is the sniper squeeze. Okay, our logic here is this is your primary R return on investment engine. It sits perfectly halfway between the current spot that it was trading, right, and the $24 volatility magnet. Okay, this is our trade link right here. All you have to do is click on these. This is the contract we're trading. CCL April 17th, 2026, $27 puts. These are the trade we got in this morning. Execute in the morning bounce, aiming for sub 120 to mid 120s. Okay, now here is leg two, the 40% allocation. This is going to be the logic on this. Maintains your immediate delta exposure, keeping you actively in the trade for immediate downside continuation, but at a reduced capital weight to protect from our peak IV pricing. And here is our contract for this one. CCL April 17th, 2026, $29 puts. These are also what we're in. Now, this target was execute in the morning bounce, aiming for $1.90 or to the dollar in mid 90s. Okay. Here's our risk management, the volatility trap, 10 to 14-day hold. Okay. Here is the most important piece of these edge alerts, the discipline and the risk management rules of engagement right here in front of us. This is what we provide for the traders in our community. The volatility trap is going to be 10 to 14-day hold. Okay, this is a surgical momentum strike. We hold for the 10 to 14-day tactical flush towards our $24 magnet. If CCL chops sideways and panic fades, exit our stack to preserve capital. Do not hold until expiration. Right here, we're not holding these contracts till expiration. We have 10 to 14 days. Okay, today being the 3rd. All right, so by the 17th, we are out completely of these contracts. Now, The structural invalidation is $31 if crude oil collapses and CCL catches a sustained relief rally, closing $31.10. Immediately technical resistance, right? Immediate technical resistance. The war rebalancing narrative has temporarily paused. We're going to exit the stack completely. No emotional holding. Okay, so we're going to put this on our chart immediately. Now, that is going to be $31.10. There is our stop right here. Right? We're going to go here. That's right here. That is our stop. And right now we got a beautiful, beautiful chop to the down. This is on our 2-minute chart, but still, we can even add some more of our levels. But right now, that is what we're looking at on our chart. And here is another thing. Okay. So, the strategic summary: the defined edge in institutional order flow exploitation capital efficiency via the 60-40 split, okay, and patience on the entry. We are letting the $24 volatility magnet do the heavy lifting while protecting our capital from peak panic pricing, okay, by sorting the reflex bounce. Don't just predict, profit. And here is again, we say it because we have to, not financial advice. Options trading involves significant risk and can result in the total loss of premium. Okay, only use capital that you can afford to lose when it comes to trading. Again, we're going to help you and do everything we can to manage these positions next to you, but like we said, no emotional holding. The rules are the rules, and the rules of engagement are simple. Again, we are not telling you to get in to these in that manner, but we are sharing our trade idea that we've executed this morning. So now jumping onto our contracts, we are in leg 2 here, okay, of the CCLs. Like we said, right now it's trading at a bid of $2.47, and the offer is $2.55. Okay, we bought this at $2.17. We're waiting for the bid and offer to hit here, okay? Now, here's our other play from our oil, the XLE. We still have 107 days on these contracts, and this is the April 27th, $45 or excuse me, $29 puts for CCL right here. This is the exact edge alert. Make sure that if you guys are interested in executing this position, and we're doing good on both, just this one's break even, we put it on today, hasn't changed in too rapid of a movement. Our XLE right here is P&L open, is we're up 50% on this one. Okay, now these will wash each other out. 232 for the day on our edge alerts and the options that we have provided in our edge alerts thus far. So let me show you again what we were going over yesterday in yesterday's video that we released. So this is going to be the eggs over easy. Okay, eggs over easy edge alert here. And this we'll go step by step again, but these are the predictive market plays, okay? What I mean by predictive market plays is that these are going to be made or traded on platforms such as Kalshi and or Polymarket, things of those natures. These are companies that provide what we need from them in order to execute these predictive market trades. And we will be using Kalshi in today's live stream, okay? And give me just one moment. See this real quick? Okay. So let's see this. Make sure everything's cool. Okay. So now let's do eggs over easy. This is again our predictive markets play for our forecast edge trading community. This is going to be eggs over easy. Here is our thesis. The calendar matters. We have uncovered a massive behavioral dislocation on the Kalshi board for the February CPI egg print. Okay, the retail crowd is currently panic pricing a headline driven biologically shock, completely ignoring the structural reality of the US government actually of how the US government actually calculates monthly inflation data. Okay? Now, we are stepping in to exploit a 0.18 expected value edge. Okay, here is the exact breakdown on why the market is wrong and how we here at the Forecast Edge are going to be trading it. All right. So, the retail trap, the Pennsylvania bird flu. Retail traders are watching the news, okay? They see the devastating, highly pathogenic avian influenza, the HPAI outbreak in Pennsylvania that has wiped over 7.6 million commercial layers. They remember the $6 egg prices, okay, of previous years, and they are blindly buying the yes bracket, assuming grocery stores' prices are instantly going to spike, okay? Here is the structural truth and our data edge here, okay? Now, this is before the Pennsylvania coal made headlines late in the month, the US egg market was in a state of historic oversupply. Flocks had fully recovered, driving wholesale prices off a cliff, right? The wholesale math is right here. National negotiated loose, large white shell eggs plummeted by 46% over the last month, hitting a floor of just 43 cents a dozen. Now, the retail reality and the latency arbitrage is this. How do we know this while the rest of the market is flying blind? The BLS CPI data is notoriously slow for monthly data, all right? To get a real-time pulse on what consumers are actually paying, we bypass the BLS entirely and go straight to the USDA AMS Eggs Market News reports, okay? All you have to do here, this is where we're going to be looking and seeing again, you can see monthly, you could see daily, all the stuff that we're talking about in this contract and what data we're looking for can be research right here. Again, this isn't financial advice, so we you have to do your own research, but we are providing the tools of that research right here with, like we always say, another saying here at the Forecast Edge is if you can click it, you can trade it. And our brilliant partner and brilliant engineer here at the Forecast Edge, Thomas, has made it as simple as clicking a button for you guys to be getting the tools you need to do your own searching and your own data and your own technical analysis on these positions, but also taking the trades themselves, executing these positions. It's an incredible thing. So here's the source. The USDA aims National Retail Report, shell eggs and egg products published weekly and usually on Fridays. Okay, the mechanics are this. The USDA actively scrapes over 29,000 retail grocery stores weekly, circulars and ad flyers, right? This high frequency data showed conventional caged eggs were heavily featured at a weighted average price of $1.83 a dozen for the vast majority of February. We are front running this lag in the BLS print using real time retail scanner data. Okay, now here's our shield, the BLS shield. Why the late month flu doesn't matter. The Kalshi contracts resolves based on the official Bureau of Labor Statistics, the BLS CPI average price data. Okay, the average game. The BLS collects pricing data continuously throughout the entire referenced month to create a weighted average. You cannot erase 25 days of 46% wholesale collapse and aggressively retail discounting. The math simply does not allow the late month tail to wag the full month dog. Okay, now the supply chain latency is it takes 2 to 6 weeks for a wholesale supply shock to fully drain from cold storage, right, reserves, and force retail grocers to reprice their physical shelves nationwide. Again, the PA flu shock is real, but the inflation will not physically land until the March data collection window, right? Here is our free edge for you guys. The flat rule. To resolve, yes, the month over month change must strictly be under 0.0%. No wins on both the negative and the flat outcomes, all right? Here it is, your execution matrix. Based on the wholesale trajectory, our quantitative models assign an 85 to 90% probability that February's average retail price prints lower than January's, with the Kalshi crowd offering us an entry of 67 cents. The expected value math dictates a heavy confident entry. Okay, trade link is right here. If you can click it, you can trade it. we're buying no for eggs. Prices will not go up, okay? And the execution is acceptable up to 75 cents. And we're going to go and do this trade real quick too. And this is the bankroll sizing, 10 to 15% of an event-driven bankroll. If you guys have a unit size that you're trading, it's or even overall risk capital, 10 to 15% of what you would put that into a predictive market contract and predictive market event. Here we go. Buy the no contract, let the retail crowd chase the headlines, let the calendar burn out the rest of the month, and collect the payout when the official BLS data drops on March 11th. Don't just predict, profit. And again, this is not financial advice. Prediction markets also involve high risk. Only trade with capital you can afford to lose. Okay, now with that being said, let's plug in to the trade link. Look how great this is. Takes you right to where we need to be. All right, now we see that right now the entry for no is at 72 cents. This is still acceptable. And in today's video, we can add $5 more to our position here, right? And with that, now you see we have 55 contracts of no at an average price of 68 cents, pretty much 69 cents here, right? And it's going for 71 cents at the moment, which is great for us, okay? It's still a great time to get into these positions. And again, well, this is one that we gave you guys on the house. And if you are interested in being a part of the Forecast Edge trading community, all you have to do is go to our website, theforecastedge.com, and that is where you will see on the right-hand side, joining the war room. When you join the war room, then you are granted access to our Edge Alerts via our trading community on Substack. And again, this creates a very fun and exciting way for traders and individual investors to make money, whether it's on futures markets, predictive markets, option contracts. This is all, every thumbnail you see in front of you represents another one of our trade ideas. And I know the year's just starting, but we have seen some phenomenal returns on these positions so far. That's exactly what we have up here. We have 16 wins and 4 losses at an 80% win rate right now, with 261% in net return on investments. Okay, that is our edgeometer right here on our website. It's one of my favorite features, the same way that we have our ROI calculator here on one of our plays for the IBIT. This was the iShares Bitcoin Trust ETF. We shorted this on January 29th, held it for 4 days, and it produced returns of over 502% on just those contracts for the February 6th $46 puts. If you put $100 into this trade, this would have given you $502 back on your 100, and that is a phenomenal return, fantastic return. So now that we have gone over both our CCL positions and our eggs over easy, we will be wrapping up today's midday broadcast. As always, thank you guys for joining. Make sure that you like and subscribe, share with your friends. All you have to do if you're interested, again, is go to the website, theforecastedge.com, join the war room, and then we will see you on the other side. With that being said, happy trading, my friends. Don't just predict, profit, and we will catch you in tomorrow's video.